Hey, what's up guys? Welcome back to the channel. So today I will be reviewing Mycelium, formerly known as Tracer DAO. Mycelium actually is a protocol that's built around financial market infrastructure on public blockchains. And Mycelium actually specializes in data provision via the Mycelium node, and also a derivatives exchange, which is called the Mycelium Perpetual swaps, which actually makes it possible for you as a user to open leveraged long and or short positions on a bunch of cryptocurrencies. So this is the platform that I will be reviewing today. Stay tuned. I'm going to go inside. It's a little bit windy out here, but don't forget to give us a like and a subscribe. I really appreciate every one of you. And don't forget to check out the links in the description and join our Telegram and our Discord server. Let's get into Mycelium. So just to give you an idea of how Mycelium actually works. So effectively, users would trade against the Mycelium liquidity pool, or the MPL, which is in fact comprised of a basket of blue chip assets and stable coins that are generally pulled together. And the pool actually acts as a global leverage trading automated market maker. And also it does act more like a universal counterparty to traders. So essentially what happens there is the liquidity pool agrees to the counterparty to any long or a short trade at any given price and for an asset that it holds until it runs out of that particular asset. So MPL, or this Mycelium liquidity pool, also allows you as a trader to swap between any two assets in the pool, and this also includes stable coins. And also on Mycelium, liquidity providers are actually able to then deposit any whitelisted assets into the MPL pool, and in return they receive these MPL tokens, which actually also tend to represent the liquidity providers' share in the diversified liquidity pool. So liquidity providers will tend to have exposure to potential capital appreciation of the MPL token if long exposed to any or the base assets such as Ethereum or Bitcoin in the pool. And liquidity providers or holders of the MPL tokens are then able to earn income from trading fees in the form of either ETH rewards or MYC, which is rewards which come in the form of a token, which actually has the right to vest over 6 months into MYC. That is, if staked in the MYC vesting vault, the MPL performance is actually also very easy to track. So I'm just also going to touch on what actually makes Mycelium Perpetual Swaps DEX quite unique. Traders that use Mycelium, the swaps, can actually just expect also to get low fees. So the fees range, I think you've got a 0.09% entry and exit fees. And this also helps you maximize trading profits. Also, they do have frequent rewards. That means every fortnight, if a user is in the top 5% of traders, they can also earn 5% of the fees. And also good liquid markets for, let's say, BTC or ETH or Uni, Balancer, Link, Curve, or FXS are all available. And you can also have up to 30x with liquidations set at 100x in order to help you minimize risk. So let's now talk about MPL staking. So Mycelium also aims to provide maximum utility to MYC token holders, and millions of MYC tokens are then lent to the Mycelium treasury, and the rewards are as high as 269%. These are all paid in ETH. When a staker deposits MYC, they are effectively entering into some sort of a loan agreement with the Mycelium treasury to start earning the rewards. And MYC staking also provides you as a token holder the opportunity to actually earn ETH rewards on your idle MYC. So by simply depositing that into the vault, you as a holder can actually start earning staking rewards that are actually paid out on a continuous basis. MYC staking is also hosted on the Arbitrum network, If you guys have been following my videos, you know how bullish I am on some of the projects that are really utilizing Arbitrum. It's coming to look like it's one of the very resilient layer 2. So I think you guys should definitely tune into what's going on this network. So what I just meant to say there is it means that in order for you to participate, if you're a holder of MYC, you actually need to agree to also bridge your assets. And what's nice about Mycelium is that there are no minimum deposits of the tokens in the staking program, and it's also made available to all holders irrespective of the size of their holdings. And if a staker wishes to claim their rewards, they can simply do so just by clicking a claim button. And presently the program doesn't come with an auto compounding feature. However, the team is said to be sort of working to make this feature also available to users. So if you want to know how to get started, stay tuned. I will be getting into how you can actually use this platform. So I was just talking about staking, and actually getting started with MYC staking is pretty simple. All you need to do is go to stake.mycelium.xyz. It's also important to remember that MPL stakers indeed earn rewards via a combination of ETH rewards, that is fees that are generated from swaps and leverage trading converted to ETH. And you can also earn via market making, that is a small spread on the long tail assets, including on Link or Uni, for example, which actually accrues to you as a holder through the appreciation of the MPL token and the ESMYC that I mentioned earlier. And also, if you're an MP or MLP holder, you can earn about 70% of fees that are generated on the platform, and MLP returns target a yield of about 25% APR through a combination of ESMYC distributions and also ETH that is earned by fees. And according to their empirical analysis of the actual platform, MLP holders have earned on average 20 to 45% APR. And when it comes to the MYC token itself, it has the utility of governance. So within that ecosystem, so if you're a holder of MYC, you're able to participate in staking, which I've just given you a rundown on. And this actually gives you as a holder an opportunity to also earn rewards. So in order to purchase MYC, what I actually had to do is I had to deposit some Ethereum to my ETH wallet on Arbitrum. And in order to do that, I had to actually bridge some ETH from the Ethereum blockchain on my MetaMask wallet using the Arbitrum bridge. So you as a user can also trade on Mycelium Perpetual swaps using a Web3 wallet such as MetaMask, as you can see. And what I just had to do was I had to authorize the transaction within my wallet, and once that was sorted, I could then wait for my ETH on Arbitrum to be credited. It took about 15 minutes or so. So of course things didn't go as planned, but I just kind of went ahead and decided I'd document the process, because these are some of the things that you will encounter when you're trying to play around in DeFi sometimes. So what I did is, after bridging ETH to Arbitrum, I actually then remembered that I can't swap from a wallet on the actual Arbitrum network. So you can actually just use a decentralized exchange. In this case, I used SushiSwap to execute the trades on Arbitrum. And in addition to that, I also found out that MYC tokens are actually on the Ethereum network. So then I had to proceed to then add the contract address to my MetaMask. And if you want to know how to do that, it's quite simply what you can do is, I think the easiest way is to go to CoinMarketCap, look up MYC, and you can see that they will give you an option to add the contract address to your MetaMask. And you can also do a verification on Etherscan. So it's very important that you actually add the real correct contract address so you don't purchase the wrong token. So once I had the actual token specs in my MetaMask, I did proceed to do a quick test transaction. And as you can see here, I swapped a little bit of ETH for Mycelium, and I can see my swap went through nice and easy. And what was really sort of interesting to me is the fact that they also have insurance. So the Mycelium pool actually offers protection on the liquidity token that actually represents the liquidity provider's positions, that is the MLP. And if you're a user, you're able to file an event and actually have your insurance paid out within 3 blocks. And this is if the price of MLP falls below a threshold that's determined by MLP assets under management and or the actual MLP supply itself. This actually covers a range of different risk types. Okay, so that could be rug pulls, smart contract exploits, the volatility of unstable assets, governance on attacks, and other risks, and that could significantly impact or reduce the actual MLP assets under management or the supplier ratio. So if you're a policy holder, you're paid out in USDC. So let's say there's a smart contract hack or something like that. But if USDC itself loses the 1-to-1 peg to the US dollar, underwriting the capital will actually maintain the value. So additionally, if say another protocol in the vault does suffer a default event before the pool does, then the vault is also in a position to potentially default and then be unable to fulfill the payout of value for that protection. So these are things that you need to be aware of. If you want to know more about sort of insurance and things like that, I've done quite extensive coverage on InsureAce, on what's the other one? The NXM, Nexus Mutual. I'm actually part of that mutual. So I take my insurance through them. And as far as the Mycelium Perpetual Swaps DEX, they actually have also a referral program, and you can choose to participate in that if you want to. And they always have prizes that can be won for referring other traders to the platform. But just to conclude, I think Mycelium Perpetual Swaps Decentralized Derivatives Exchange is one of these derivatives DEX that offers quite good features. Others that I've reviewed include Gains Network. I think Gains is going to be really good if you want to do decentralized trading of crypto and Forex pairs as well. You can use Gains. And if you want to do options, you can use Premier. I've also done a review on that. But these differ from obviously centralized crypto exchanges such as, Binance, FTX, which we've seen collapse recently, and a whole host of other centralized exchanges. But you also have some competitors like OKX and Wabi, KuCoin, BitMEX, Deribit, Bybit, etc. If you prefer to use centralized platforms, but I think a lot of people are now starting to move to DEXs. So I think this is something that you should start to get accustomed to. Of course, the user interfaces aren't as easy to use at the moment, so it takes a little bit of patience. If you want to actually just have a nice reference point, I'll leave a link to the actual article that I did, and I also took some screenshots of what I was doing and documenting that process, so it'll make it easy for you to have a nice follow through. But other than that, don't forget to do your own research, of course. And don't forget to check out the links in the description to my books. Tokenized Trillions deals with real world assets on the blockchain, and this could be real estate, equities, etc. So it's a very comprehensive book on how you can actually do tokenized real world assets. And also check out Blockchain Applied if you just want to know some of the different use cases of distributed ledger technologies. That would also interest you if you want to know, for example, use cases of insurance and all of those things. I've touched on that in that book. The link is in the description. Join our Telegram and our Discord server. Once again, like, share, subscribe, turn on the notification bell. I'll see you guys in the next one. If you want to suggest any other platforms that you want me to review, then also drop a comment. Till next time, peace and love, y'all.